This is a very methodical, well thought out plan. And if you move too quickly in a world where information travels at the speed of light, you cut off your nose to spite your face. And that's why
silver is unique, I think, in ways that your listeners need to understand when they're trying to comprehend silver.
If you ask me, is gold a better performer than Bitcoin for the next, 12 months or so, I would definitely favor
gold versus Bitcoin, a clash of the titans in the realm of alternative investments. But what do the experts have to say? Join us as we bring together three formidable voices in the world of finance. Andy Schectman, the visionary president and CEO of Miles Franklin; Rick Rule, the esteemed president and CEO of Sprott U.S. Holdings, Inc., and Gareth Soloway, the astute chief market strategist and CFO of In the Money Stocks. Watch these expert analysts discuss gold's long-standing allure and the disruptive power of Bitcoin in this exclusive video. Prepare to be enthralled as we explore the complexities of alternative investments and uncover strategies that could transform your financial future. Gold versus Bitcoin. Clash of perspectives is on now. So let's start the video.
Let's see here. Bank of China did 14 million CBD settlement for overseas gold via the Shanghai Financial Exchange in December 2020. That's not it. 1 million barrels of oil from the PetroChina. They're using the M-Bridge, and basically the M-Bridge is the same thing here. It's just a digital platform that allows these central bank digital currencies to trade with one another, not using the SWIFT settlement system. So if all of these countries that are coming together and they're waiting to do it the right way, to list a common settlement currency, which will probably happen, if they all agree in the meantime to trade with one another in their local currencies using this bridge platform, which supersedes the SWIFT, that's the first step at chipping away at the hegemony of the dollar, at the settlement status of it. But the fact that, what we're really seeing is that the proceeds are no longer going into treasuries. And so they're buying gold and commodities in place of treasuries.
Get ready to switch gears from gold to silver. As Andy Schectman discussed gold just a moment ago, it's now time to talk about another precious metal, silver. And who better to guide us through the silver market than Rick Rule? The clash of perspectives continues, and silver is taking center stage. Let's hear his thoughts on silver.
I'm interested in silver precisely because it's disappointed people. I'm interested in silver precisely because your audience, who probably had some expectations around the year 2020 around silver, was disappointed. I'm interested in silver because it's unpopular, it's out of favor, and it's regarded as dead in the water. I remember, Antonio, when you and I were discussing uranium a year and a half ago, and some of your constituents were asking whether or not we'd lost our minds. Obviously, buying things when they're hated and enjoying the arbitrage from hated to unhated is the easiest money that's made in speculative markets. And the fact that from a speculative point of view, silver is dead in the water, and from the point of view that it has disaffected so many people who were attracted to it in 2020 and 2021, is precisely the reason why I'm attracted to it.
Now that we've gained valuable insights into the silver market from Rick Rule, it's time to navigate the digital realm with our next speaker, Gareth Soloway. But before we delve into Bitcoin, let's take a moment to reflect on the broader market dynamics that set the stage for Gareth's analysis.
Yeah, so over the last couple of weeks, we went through a period where CPI and PPI came in hotter than expected. And then yesterday, by the way, since those CPI and PPI numbers, the market started to get a little nervous, right? But what we saw was that yesterday, the PCE data came out that calmed nerves. The markets rallied. And today, we just got the ISM data out, which came in weaker than expected as well. And again, a lot of people out there probably like, wow, weaker data, not as good. But weaker data means the Fed may be printing or lowering rates sooner. So So bad news is good news. That's the environment we're in, especially if the PCE data is the one we're going to go by, which is telling us inflation is still kind of sticking around this 3% level. So what we saw today is the dollar starting to drop. That kick-started gold. Gold is having a huge move. It looks to me like it's borderline breakout. We know Bitcoin's had a big move recently, but that's really just a summary of what we're seeing today.
No, but you can see by the numbers, the export numbers out of Switzerland, they're off the charts. So we are seeing a lot of metal being sent there. We don't know. I mean, you can see, look, there was somewhere in the neighborhood of 350 or 60 or 70 million ounces of silver delivered off of COMEX in the last 2 years. Well, is there any coincidence you think that India imported, over 400 million in the last few years? So when we talk about the amount of silver and gold that are leaving the vaults, no, I mean, even when they did a report about it last year, there was a non-biased report by mainstream media, and it basically said all of this gold is leaving, and a large percentage of it, they're not sure where it's going, but they assume it's going to the BRICS nations. And that's really kind of the allure also to this, is not only the ability to not be tracked and traced and monitored or coerced or manipulated by the West, they have anonymity.
Now, let's get around to the basics of your question. Why silver? Silver is the most volatile, I would suggest, of the precious metals. I'm defining the precious metals to be gold, silver, platinum, and palladium. Silver traditionally is a second half mover, meaning in precious metals bull markets, the markets are generally led by gold. Once the trend is established and the narrative is established, silver, for whatever reason, and I'm not sure of the reason, perhaps the lower unit cost, moves further and moves faster than gold. My first attraction to silver, of course, came in the decade of the 1970s. The cause for that attention was the fact that the silver price moved from, if my memory serves me well, $1.20 to $50, which was certainly a dramatic move. I'm not trying to say that I caught the bottom or that I caught the top, but I caught enough of the middle that it attracted my attention and has for the rest of my life. And as dramatic as the moves in silver are, the moves in the silver stocks, possibly because the population of them is so few, is even more extravagant. During that period, the 1970s, one silver stock, Coeur d'Alene Mines, moved from 10 cents to $65. Alas, sadly, without me. But that's okay. Others did fine with it. So I would say that there are, from a fundamental point of view, a couple reasons to be interested in silver and silver stocks. But you have to be, I would suggest, first of all, a speculator. And you have to be, I would suggest, the
Chinese, Alistair McLeod, will tell you that they have 38,000 or more metric tons of gold. No one knows how much they have, but just by doing the mathematics of what they import and what they produce, he believes that between the people and between the state, they have close to 5 times what the United States does. And in both cases, there's a shroud of confusion as to what either entity has, right? We haven't audited Fort Knox since 1956. And the Chinese rarely update their numbers. We know they bought for 14 straight months, but their numbers, if you believe Alistair, are about 8 or 9 times below what he thinks that they truly have. So yeah, I think indeed the numbers are much greater than we would ever believe. But no, we don't know. I don't know of how much has left the Western vaults and found its way. But look, you can see that they've tried everything, whether it be direct deliveries off the exchanges, or in this case, arbitraging, turning up the heat of silver and gold prices so that those traders who have access to both markets can indeed buy in London, buy in the US, and sell it for delivery in Shanghai. And anything that's not nailed down that is going through the Swiss refiners, most of it is ending up in India and in China right now.
The easy money will be made in silver and the silver stocks simply from the arbitrage between hated and disgusted and unhated, just as we saw in the uranium stocks. The easy money in the uranium juniors happened as a consequence of them becoming simply less hated. And that will happen with silver, too. Silver is unique, I think, in ways that your listeners need to understand when they're trying to comprehend silver. First of all, most silver doesn't come out of silver mines. So the supply side is a really interesting conundrum. Of new mine supply, last year, I believe 18% of the new mine supply of silver came from silver mines. The rest came from copper mines, gold mines, and lead and zinc mines. So trying to forecast mine production based on the silver price is a fool's errand, because gold prices and copper prices and lead prices and zinc prices are more important to silver production than silver prices are. And equating mining costs around primary producers is an illusion too, because those costs only pertain to 18% of mined production. Most silver, as a consequence of it being a byproduct or a co-product, requires, from a mining standpoint, only the processing of the silver stream. The costs are paid for by other metals. So the primary cost of production of silver is often less than people think it is.
But you're right. I don't think we see the craziness that we saw back in, 2021 or in 2017 yet. Now, that's a positive, because once you see that absolute insanity permeate every investor, it's usually closer to the top. Having said that, again, after what we've seen, and we could see the chart very clearly here, we've had this big move up here. We did come into a little resistance. I still remain long-term very bullish on Bitcoin. I think, again, as a store of value, it will eventually migrate to that. Right now, it's a risk asset. And I think that's, if you're looking for the bull case, the bull case is still very overall in the world underinvested, 21 million max supply. These type of things are the key bullish things. We have the halving coming up as well. The bearish side of it would just be more in the short term, which is that risk assets have gone nuts to the upside. Stocks like Nvidia and Microsoft. I mean, so many of these names that were not even close to $1 trillion a few years ago are now north of $1 trillion, if not $2 or $3 trillion, right? So you've had this major risk on environment, and that I think has also benefited cryptocurrencies and Bitcoin as well. So my biggest fear for Bitcoin, and this is the only bear case that there is that you will have some sort of correction at some point. And the question is, how much does Bitcoin get driven down? But if we zoom out on this chart, we can see again, you go back to this low down here. I mean, we were trading at 15,000 and change, and it just continued to kind of grind higher. And then you're getting a more accelerated move here, which again, usually comes at the end of moves. Now, again, please understand, everyone watching, end of move doesn't mean, hey, it's over. It just means it might need to pause or pull back here in the shorter term before gathering momentum to push up through. So again, amazing move. Again, notice where we just stalled out. The 2021 high pivot. In fact, I think we had an interview back here when this was at 65,000, and I said, hey, it's going to drop to 30,000 because of a head and shoulder pattern, and it dropped to 30,000 within a week. I remember you had me back on. Then we went up to 69. So you basically have your two levels of resistance here, 65 and 69,000. Watch those in the coming weeks.
I think the Perth Mint took a lot of unnecessary heat last year for sending bars that were 24 karat gold to the Shanghai Gold Exchange, but they had slightly more silver inside of them, I guess, than they would allow, and that they made a big deal of it. It's not that the bars weren't 24 karat, it's that they didn't have 24 karat gold in it. It was that they weren't pure enough for the Shanghai standard. So yeah, and that makes good sense. And look, this is a very methodical, well thought out plan. And if you move too quickly in a world where information travels at the speed of light, you cut off your nose to spite your face. And that's why it lends itself to a lot of naysaying and a lot of people thinking that, well, we've been waiting forever. And I understand that. Look, when you look at Nvidia, when you look at Bitcoin, when you see things that are moving with such great velocity, Peter Schiff says, you take the elevator up and you fall off instead of the stairs up and the elevator down. Look, this is a situation where the markets are moving in a way that they never did in all of my lifetime. And so people have grown accustomed to seeing instant gratification not being quick enough. And I understand that. It is the tortoise. It is not certainly not the hare. But it's one of these deals where if you take a step back and you look at the significance of the base building and the methodical accumulation, and really the way that it's being done in a clandestine manner by all parties, you can understand the significance of it, at least in terms of, I think, a global system that will be tied to it. So patience, I guess, strong fingertips, trust your gut and your conviction. That's the only advice I can give you, but I don't think there's anything that someone could say to me that would throw me off of my belief that this is being done right out from underneath the West by using price and rhetoric as their tool of misdirection. And I want people to think about something, in terms of what gold could really do. People think that the dollar has to be completely destroyed before we see this moment. But you go back to 2015, gold had just made a low, basically, real darn close to it. And the dollar index was at 104. And if you go to where we are right now, 9 years later, gold has doubled and the dollar is only up 5%. And this is what I mean about the tortoise, not the hare. Well, what happens when the dollar starts to get clubbed and everyone starts dumping dollars? And you see that 54% of all the COMEX gold has been taken off the COMEX since February 2021. And I guess what I would say is that when gold starts to rise in your currency, despite, I guess we can even call it the illusion of positive real rates, which we've seen here, which we all know they're not real, but according to the lies that we get out of the CPI, okay, they're real. That means your government's got some serious debt problems if rates remain positive. And I don't believe you'll see rates fall one bit. Now you're beginning to see them taking that off the table and even talking about rate increases. You're beginning to see a steepening of the yield curve again, where people are shedding 10-year treasuries in anticipation, and 20-year and 30-year in anticipation of higher inflation to buy the short-term rates and the debt issuance of Janet Yellen and the spending. You're going to see, I think, higher rates on short-term treasuries and higher rates on long-term treasuries. And the bottom line is this is not good for the funding prospects of the debt and of maintaining it for Main Street. And you're going to see all sorts of problems with commercial real estate, and all of that stuff will manifest. What is the trigger? Who the heck knows? We live in a world where, all of a sudden, nothing makes sense. But, it's interesting. Jamie Dimon bought 1.235 million shares of JP Morgan between 2009 and 16 at the bottom, and he just sold almost 822,000 shares at the top for $150 million for the first time ever. And we keep talking about all of these insiders that are selling, or not Janet, what's her name? Nancy Pelosi, who just bought huge call options on a cyber, 1.25 million on a Palo Alto's networks, one of the leading cybersecurity companies in the world. And lo and behold, that's way up today. And so when you talk about what's happening, the rot at the highest level of our leaders, our administrations, and yet when people try to figure out where the hell we are, Craig Hemke had a really interesting article. He talked about the fact that for the last 4 months in a row, the consumer confidence data came out really high, and you would see big market moves off this consumer confidence data, but really quietly they've revised 4 months in a row to massively negative. In fact, this in January, it was the most negative since February of 2022. And so whether it be lies about consumer confidence, about inflation, about interest rates, about any of this stuff, we're being misdirected, we're being lied to. And at the same time, Bezos and Zuckerberg and Diamond and the CFO of Discover Company and all of these insiders and tech insiders, they're building bunkers and heading for the hills. It's misdirection. And I think that people need to understand the fact that we haven't seen things play out the way we would expect them to in a linear world. This is a very high stakes game. And if you're getting close to the end of the game, and the insiders who know the playbook, well, they're not going to tell any of us. They're going to do all they can to position themselves, whether it be getting out of equities and into cash, accumulating gold. What is it? Druckenmiller, I think, just bought huge amounts of gold. The insiders know the playbook. And you have to sometimes see what they're doing. And look, I would say this: wisdom is seeing what is really happening as being truth rather than what we are being told is truth. And I think we can see what is happening around the globe is not being told to us. We are being told that, oh, the economy is great, unemployment's great, and then we revise the 2023 numbers down by 40%. But the January numbers were amazing. Of course, those are seasonally adjusted numbers, and they'll be adjusted downward. So all of the things that we talk about that make this economy seem so great, well, they're really not. And so I think we're being misled in many ways by our own administration, who isn't telling us the truth. And I think that's part of the problem, is that people think they're crazy.
And as the price of silver rises, the supply rises for two reasons that most people don't consider. The first is recycling. At low silver prices, it is less efficient to recycle. At higher silver prices, it's more efficient to recycle. And the easiest silver to grab is the silver that's already been mined, that is recycled as a consequence of industrial utilization. The second is that the above-ground stockpiles of silver are large and almost unknowably large. Silver still represents a store of value, if you will, off official balance sheets, particularly in South Asia, in India, Bangladesh, Pakistan, Sri Lanka. And what you'll find is that when the silver price moves up in U.S. dollar terms, particularly when the U.S. dollar moves up relative to South Asian currencies, that South Asian people tend to dishoard their silver, which is to say they tend to be better silver investors than Americans. They tend to buy it low and sell it high, unlike us, who tend to buy it high and, of course, sell it low. So the supply of silver is very difficult to understand. The demand side can be similarly difficult, although it's important to note that right now at these silver prices, there is a supply deficit, which is to say the amount of silver produced in all sectors, primary production, co-production, and recycling, is substantially less than global consumption for fabrication. It's important to know that. What is unknowable, at least by me, is what the above ground inventories are and where they're available for sale. So the fact that there is a primary deficit, while it's relevant, is a very difficult thing to gauge fundamentally, because most of the supply that's ever been mined still constitutes in some way, shape, or form supply. Silver bulls, if there are any left, other perhaps than myself, should get solace from the fact that industrial utilization and application of silver is growing very rapidly. The solar industry, as an example, doesn't exist without the reflective properties of silver. All of the new solar panels that you see in Northern Europe, where the sun doesn't shine, are of course dependent on on silver. But importantly, new utilizations of silver are occurring. It is fairly durable, it's fairly malleable, it's fairly conductive, and as a consequence of that, and by the way, it's cheaper than gold, of course, as a consequence of that, the utilization of silver in the fabrication of electronics is growing rapidly. But silver is also a superb germicide, which means that medical applications, water treatment applications, and sewerage treatment applications of silver, making use of its germicidal properties, are probably the fastest growing new technological innovations around silver. And I think it's important for people to note that. One of the things that I've always laughed about with regards to the gold market is that with regards to gold, we usually take it out of a hole in the ground called a mine. and then we put it in a hole in the ground called a vault. With regards to silver, an awful lot of it is used. Now, some of it is, of course, as we said before, recycled. It comes back into supply. But a lot of it doesn't. A lot of it is just plain used. And I think that's important. The price of silver, however, does not seem to be set by supply-demand imbalances. Perhaps because the supply is so difficult to understand and forecast, as is the demand. A lot of silver is held off balance sheets, again, particularly in South Asia. And it's difficult to know exactly what demand is there because people are using it precisely because it isn't a government currency. It's used as protection from their government. And those people are wisely unwilling to disclose wealth that they are trying to protect from their own governments. This, I can tell you, when demand for silver, investment demand for silver picks up, the price of the stuff is extraordinarily volatile.
Well, I can just say, from my perspective now, remember, I'm a swing trader, so I don't really have a long-term perspective. If I did, I would be holding it. I do have a small hodl position from 17 that I talked about back when I bought it. It was only a 1/6 position. I was hoping it would drop below 17. Every 3,000 down, I was going to add more. I never got a chance to add. So I just have that little bit. Aside from that, I swing trade it. I am short here around the 60,000 or just shy of 60,000, but that's a swing trade, meaning that if we drop back to 50, to 49, which was that previous peak. Remember, when the spot ETF approved, it topped out at 49. That would be my retrace, and then you could start to look to buy at that. So I'm going to cover my short around 49.50, and then I'll decide if I want to go long. I think ultimately it's a buy the dip scenario, but just be aware that if the stock market really gets in a bad shape, you have to maybe wait a little bit more, let it dip a little bit more before you rush in, because things like this asset, I mean, you saw it go from 69 to 15 in basically a year. You have to be aware that dips can be more than just 5 or 10%, right? It can be dipping 50% if the conditions in the economy and the central banking system are the right conditions. This is something I've been talking about for a long time. I said, listen, it's going to happen. It's a matter of when, not if. We had this beautiful little consolidation, and now look at today's move. Gold is up 1.5%, which for gold is a big move, and it's right into that level. If I zoom out, this is the level going back to the highs of 2020 that we keep on hammering, and we still have this beautiful inverse head and shoulders that calculates the target out to about 2,500 and change when all is said and done. And the one thing I'll say is, again, I've said this before, but central banks have been buying more gold than ever before. I mean, they are just loading the boat, and these guys are the ones that print the money. And so again, for me, it's like, okay, if they're the ones that have their finger on the printing presses, and they probably know they have to print more at some point due to the debt situation in the world in these countries, then I've got to have some gold on the long side, some gold miners. Gold miners have been horrendous performers, but to be honest, they look beaten down. Look at Newmont Mining right now. I mean, Newmont Mining just hit levels it hasn't seen since 2018, 2019, and is now starting to rip to the upside here the last couple days. So if gold breaks out, the miners are going to rock and roll here, and there's a lot of potential upside here. And we aren't even in a scenario, right? And let me point this out real quick, is that the scenario we are in, risk on, VIX low, markets at all-time highs, Bitcoin, I mean, everything would tell me that if I didn't look at the gold chart and you just said, hey, this is what's going on, I'd say, oh man, gold has to be 20% off of its all-time highs or 10% off its all-time highs, because it's a risk-on environment. No one should want to own gold right now. However, gold is at its all-time highs. And that tells me again that once you get a little fear in this market and money flows out of risk assets, it is going to gold. And gold, I think, within 12 to 18 months is over $2,500.
Thank you for watching Gold versus Bitcoin, Clash of Perspectives. We hope you found insights from Andy Schechtman, Rick Rule, and Gareth Soloway valuable. For more expert analysis and discussions on finance and investments, don't forget to subscribe to our channel and hit the notification bell. Stay informed and empowered in your financial journey. See you in the next video.